Hello everybody, my name is CMA Sitaraman, a faculty of Logic School of Management, and I am here to take on the topic cost of capital. Capital is the term that is used for long-term funding used by the firms. Capital is supplied by its creditors and its owners. So the creditors are the lenders of the company and the owners are the shareholders of the company. A company's capital consists of its long-term debt and its equity. Now you may ask, what is long-term debt? So the long-term debt may be bonds outstanding or long-term bank debt. Equity includes common stock and preferred stock. Now talking about common stock, it includes not only outstanding common stock but also the retained earnings, because the company's retained earnings belong to the common shareholders, and that is why we include retained earnings along with common stock. Next, we will see what are the expectations of investors. Investors who provide equity capital, they expect returns in the form of dividends and share price appreciation. At the same time, investors who provide debt capital, they receive interest as return on their investment. Therefore, a firm must be willing to provide an adequate level of return for the risk that the investors perceive in their investment. Now, a company's cost of capital, that is the required return expected by the investors for their investment in the company's debt and equity. In simple words, the required return from investors' perspective is equal to the cost of capital from the company's standpoint. Now we'll move on to the topic, that is cost of capital. A company's overall cost of capital is the weighted average of all its outstanding capital, which is weighted according to the percentage of each component that represents in the firm's capital structure at market value. So it is the return expected by the investors on a portfolio consists of company's outstanding securities. Now we'll see weighted average cost of capital. It is equal to the total cost of financing divided by the total market value of financing. What are the steps to calculate the overall cost of capital? Step 1. We need to calculate the costs of individual component of capital. So the individual components of capital may include debt, retained earnings, common shares and preferred shares. The cost of these components are calculated using market values for debt and equity. Coming to step 2. Step 2 is assessing the firm's capital structure. After the components' cost have been calculated, the next step is to assess the firm's capital structure. It is assessed in order to determine the weights to be assigned to each component. Step 3. We need to calculate the weighted average cost of capital. In this final step, the weighted average rate is calculated by using the proportion of each component of capital and the cost of each component of capital.